Good morning and welcome to this weekly market update from MRC Markets. Today is the 11th of June 2012. Basically what we'll be doing today is going through technical analysis on Euro-Dollar, Cable, Dollar-Yen, Aussie Dollar and Gold. We'll not be making any trade course recommendations in this video. You trade at your own discretion. Please read our disclaimer on our website www.mrcmarkets.com. For any new followers on these videos, we do have 3 moving averages on each of these charts. The red one is a 55 simple, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at Euro-Dollar. And what we're doing is kind of, just another thing, what we're doing is going through mainly on the weekly, daily, and if we look at, we want to have a look at any sort of shorter term moves, we may have a look at the 4-hour and the 1-hour charts. But it's basically just to give you some sort of weekly outlook, what we expect to see in the weeks in terms of the charts. So here we have the Euro-Dollar weekly chart. What's important, I mean, let's talk about last week first of all. What we had last week was a nice bullish candle, a nice bullish engulfing candle, so we may have some sort of bounce here. We had 1, 2, 3, 4, 5 consecutive red candles on Euro-Dollar weekly. So I mean in total, in terms of pip wise, that fell from 132.35 all the way down to sort of 23.90. So we had a big drop in the Euro-Dollar, and now we may sort of get some sort of bounce. The level that we bounced off of, I mean that low, let's just draw the line there from that low there. If you look to the left of your chart here, what we've got, it was a previous sort of cycle low around here. Literally to the pip, we had this bounce there, and yeah, so if you look at that low there, that is, I'll just done it again. That was the reason that we got a big bounce in terms of the technicals. So you can see that low there and to that bounce low to the left of your charts there. That was the sort of key technical level that people are looking at, sort of 23.50 marker, and that's where we've got this bounce. So it's quite a key. It could be this sort of cycle low really. I mean the monthly is still looking very bearish. That previous month in May was a very bearish month indeed. But in terms of the weekly, we are starting to bounce a bit, so we may get some sort of continued bounce going into the weekend. Of course, on the weekend we had the Spanish bailout as well. That was a €100 billion package which came out. So in terms of the fundamentals are looking towards some sort of bounce. But let's have a look at it a bit more in detail. Let's have a look at the daily. What do we have on the daily? Well, the recent sort of fib move that people will be focusing on the daily will be this move from the recent high to low for any sort of sellers coming into the market. You can also, what I've done is drawn that that fib there. You can see we're sort of bouncing off of this 38.2 retracement already. So you can see there we're going to bounce literally to the pip on that 38.2 retracement. But if you zoom in on the 1 hour, you can see we've got this big gap which happened overnight because of the Spanish news over the weekend. So a lot of people will be selling. Well, I've already started selling. A lot of people have already started selling off this 38.2 retracement in the hope of filling this big sort of 120 pip gap. So be cautious on that. But then again, in terms of buying, people could be buying off of one of these sort of big sort of fib levels. I mean, in terms of if the gap kind of did fill, then a lot of people could be buying off this 61.8. So as soon as it's kind of filled the gap, then would not be surprised we got some buyers off that sort of 61.8 recent sort of fib move there. But in terms of the sort of bigger picture, we still have to fill the gap. But in terms of this daily sort of fib, this is quite a big sort of fib. People will, or most suspects will be, a lot of sellers will be coming at this 38.2, which has already been evidently seen there. So if that full fib gets played out, then those lows will be expected to get taken out. But no, it'll be quite an interesting week in terms of euro dollar. Sorry, one other thing, we do have the in terms of the moving averages on the daily, we have the 55-day moving average around there, and that comes in at one spot 28.81. Then the 100-day is at one spot 30.50. So still quite a long way away from them. So in terms of the bigger fibs, sorry, one more big fib. That if people are going to be buying an even further dip, you could look at a 38.2 there, which comes out 1.25.20, and that also coincides with that gap fill as well, which is quite interesting. And then the 50%, of course, which is quite a popular fib. So keep an eye on that Fibonacci swing as well. So I mean, in terms of the daily, you got that swing from the recent high there to the low, and then from the recent low here to the high. Let's say that is the high. If we're getting this sort of bounce, then those would be the fibs I'd be looking at. Okay, let's have a look at cable. What do we have on cable? Let's flip it to the weekly for a bit. In terms of cable, what we're talking about, I mean, on this weekly chart, which I think is very important. So I'm just going to delete the 38.2 for now, so you can see it a bit clearer. Yeah, so in terms of this weekly, if we zoom out a bit, you can see I draw that fib from the low there to the high up there. There's key level that a lot of people have been talking about is this 50% retracement, which stands at one sort of 52 70s. And you can see we had multiple bounces off this level, one there, the other one being right there, and then we had not last week but the week before, we spoke about, I think on this video, these 152.70s, and they got bought up very nicely. So we had three big bounces there. You can now see that buyers have continued to come in. Last week's weekly candle, nice sort of bullish candle, though we did have a bit of upper wick on that candle, but people are coming in at that level. So in terms of the weekly, that's all I'm sort of really focused on. If we flip it to the daily, you can see it much clearer there, how we had lovely reactions off that 152.70s, pretty much to the pip the other week. And in terms of sort of any sort of healthy retracement, in terms of fib moves, we'll be looking at the recent high there to the low. I mean, you can put the 38.2 on if you want, but in terms of sort of healthy retracement, this 50% level will be quite key, which stands at the 1.5780, and that also kind of coincides with the 200-day moving average. So that'll be an important fib to look at if we do get any sort of further bounce on that daily. And then the other fib I'll be focused on would be from the low to the high there as well. That's what we got last week. In fact, we had a lovely bounce off that 50%, well, just below that 50% level. The 1.5435 level got bought very nicely. So if we have any sort of further sell-off, you can see the 1 hour, so the 100 bar moving average on this 4 hour chart is kind of capping cable at the minute. So if we get any further sell-off, then I'd personally be focused on that 50% level there for any sort of if you want to buy any sort of dips. But in terms of the bigger perspective, the big level is that 50% level there at one spot 57.84. Okay, let's have a look at the dollar yen chart. Dollar yen, what do we have? A similar sort of picture really that we were looking at previously. So let's look at the daily. It's all about, for me, this kind of channel here. In fact, the channel's kind of been broken, I suppose. Let's just widen that out a bit to bring the bottoms into play. See, the channel has been broken actually, but it's quite interesting. It's still playing out because you can see that daily candle here. We kind of popped down and we bounced off this channel resistance and 200-day moving average confluence zone. So that's a nice sort of level there. So I'd expect some sort of further pop. unless we come back inside this channel and have a daily sort of candle close inside the channel. But for me, this channel is now pretty much done and dusted, really. It's now been broken out, and you see that the resistance is now going to be acting as support. Well, I mean, it's already acted as support, so if we get any sort of further pop up, then I'll be looking at 55-day moving average as resistance, and if we break above that, then 100-day moving average as further resistance. In terms of people looking at any sort of sell opportunities, then you can draw a fib from the low, from the high there to the low, look at that 50% level, which comes in, which will most probably be coinciding with that 100-day moving average if we get up there, and that stands at 80.91. Okay, let's have a look at Aussie dollar. Aussie dollar's had a big sort of sell-off over the past sort of couple of months, really, and we now see we're starting to get some sort of bounce. Where we've got the bounce at, if you draw a support line, similar to sort of euro dollar here, we've got a bounce at a previous sort of cycle support level. You can see that. I'll just draw the arrow there. You can see that previous level there coincides with the bounce around here. So key support level, which got bought up. Sort of long sort of swing players would have been buying off that level, and that's where we've got the bounce at. In terms of this week, similar to euro dollar, I'll be looking at this recent fib move from a high to the low. You can see we're already starting to bounce up quite nicely. We're getting near this 50% retracement. That's what I'd be looking at for some sort of healthy retracement. That stands pretty much at the parity level, at the one spot 0027 level. You can see the first sort of key moving average there is the 55-day moving average, which is at one spot 0085. So if you people give it selling the bounce, then they'll most probably be selling at the 50% or the 55-day moving average. You can also see the 100-day moving average is crossing down to the 200-day moving average as well. Some people think that's a key sort of indicator, but you can see the previous time didn't work too well. So people think that is a selling signal, selling on that. But if you want to look for some sort of key sort of level, then the 50% level will be the one that I'd be looking out for. And similar with the other sort of charts, really. In terms of if you want to buy any sort of dip, then look at the fib I'll be looking out for is that recent low to high, and the 50% comes in at 0.9794. Or you can look at the previous support around here, which we got bought up at quite nicely. That comes at the 0.9835 level. Okay, let's have a look at gold now. That's done for the forex. Let's have a look at gold. What has been happening on gold? It's still the sort of key, the same sort of key level, really, on the weekly, which are getting bought up very nicely in terms of the candlestick patterns. This 1560 level, very nice action indeed. The bias is still towards the upside, purely because of all these sort of lower wicks that we're having around here on this key level. Pierces below and then bounces and closes above this key level. So in terms of any weekly resistance, I'll be looking at a 55-week moving average at 1666 there. But in terms of weekly, it still looks very bullish to me. A lot of people saying it's due for a much bigger retracement, but I'd still be very cautious, especially as it's still sort of reacting to some sort of safe haven. People will still be buying it to hedge their portfolios amongst all this eurozone crisis, etc. Gold is still a nice sort of long-term play. In terms of the daily, you can see we got a bit sticky at this 55-day moving average, and we had a nice sort of sell-off. But you can see in terms of that daily sort of candle action, look at that huge kind of dragonfly doji candlestick there that we had off of that 1560s level, and we've now started to bounce up a little bit off of that candle. But it's all about the 55-day moving average for me. See it capped very well around here, and it's also capping here, so we need to get above that for any sort of bullish momentum. Okay, that's all for the charts. Let's have a look at the forex calendar, see what we've got coming out this week. Today, quite a quiet day, no sort of high impact news. In terms of high impact news, so I should change the time on there. Set to the wrong time. Yes, in terms of tomorrow, the main high impact news is the UK manufacturing production numbers month on month forecast at 0.1%, previous was 0.9%. Then on Wednesday, we have some overnight Aussie news, RBA, Governor Stevens speaking. Then the main sort of news in the day we have out of the US, we have core retail sales numbers, we have PPI and retail sales there. In the evening, it's basically some big New Zealand data there, so you trade the New Zealand dollar, be interesting. That comes out at 10 p.m. UK time. On Thursday we have some Swissy news. We have the S&B monetary policy assessment, S&B press conference, the LIBOR rate. Now at the US at 1:30 we have core CPI and weekly jobless claims, and on Friday quite a quiet day as well, with some Japanese news on Friday, and the main sort of US news is the preliminary University of Michigan consumer sentiment numbers, forecast at 77.5, previously was 79.3. So very sort of quiet week in terms of news. No high impact Eurozone news. We have a lot of mid impact Eurozone news. For example, we have a German 10-year bond auction. We also have industrial production out on Wednesday. But no, quite a quiet week in terms of news. But it doesn't mean that the charts will be any less volatile. There's always going to be Greek and Spanish news on the wires, and there's always other bond auctions out as well. So be cautious and just trade the technicals. Really, keep it safe, and I'll catch you next week. Hope you enjoyed this week's video. Thanks.